Hi everyone, this is Kelly.
Hi, this is Paul.
We are the Property Hunters. Welcome back to our channel, the best place for property investors and homeowners. In today's first episode of our new talk show series called ATE, Ask the Experts. All right, today we have Paul here and we've actually gathered many questions from our followers on our social media platforms who have sent us a lot of questions, burning questions that they would like Paul to answer for them. Okay, so Paul, are you ready?
Sure.
Okay, so first question, wow, very big question here.
Yep.
Do you think it's a good time to buy property now?
These questions, my mentor likes to answer it this way. The best time to buy property is in the 1970s. Well, I would say it's really $1 million questions because there is a lot of conversation in the market talking about the interest rate hike. And I think it is something of concern for sure as an investor myself. With the Fed rate increasing and interest rate going up, expecting to hit possibly as high as even 3%, people are talking about possibility of recession. People are talking about will property price correct? Okay, it is a very big questions out there in the market and everyone is asking right now. So even I myself, when I look at it, I'll be thinking, okay, how do I see the market? I would say that let's take a look at it this way. Yes, interest rate is going up, okay, and we are expecting it not to come down in the next few months, okay. But at the same time, if we look at past history of Singapore interest rate, it has hovered below 2%, 1% in the last decade for sure. Okay, even when it's spiked up a little bit, okay, quickly interest rate goes down after a while. Okay, usually, when we take an interest, when we sign up for an interest rate package, it's usually a 2 years package. So this 2 years package will tide some people who have refinanced earlier on when the interest rate was low over this period of time. But I also know that a lot of people are caught during this period. For those who are caught are those people who refinance during circuit breaker time. Because just nice, the 2 years is over. And right now, do you know that a lot of banks are not offering fixed rate anymore because they are expecting it to increase. So they just want to go according to the flow and whatever interest rate hike it might happen. Okay, so in my opinion, I believe that yes, this is going to be a concern for a lot of investors because when it hits 3%, the monthly installment is definitely going to increase. Okay, so then the important questions that a lot of people will be asking is should I still consider buying? I would say that it really depends on your needs. This is definitely not a time to speculate in property. We never believe in speculating in property investment. Property investment should be something of long term. So there is always up and downs, property cycles, and of course interest rate goes up and down as well. At the same time, you should also be aware that Singapore is in a very, very unique position as compared to where we were 10 years or 20 years ago. Singapore is emerging as a very strong player, although despite that we are small in size, we are emerging as a very strong financial hub, financial center for the world, if not Asia. People are looking at Singapore, how we handle COVID, how we are, as Asia is growing, how Singapore is becoming the financial gateway, overtaking Hong Kong, and how funds are flowing from from Europe, from America into Singapore and diversifying into the rest of Asia through that manner. So with the funds flowing in, money is in Singapore. If you look at in all global standards, like places in the past, Switzerland, Hong Kong, generally their interest rates are low because there are funds in the market that needs to be borrowed out. That's one point to note. And also to take note that Singapore lands are scarce. So again, we are in a unique position because inflation is going up, land cost is going up, and labor cost is definitely going up with COVID and all the measures putting in on dormitory. So material costs are also going up because of inflation caused by the war that's happening around the world right now. So all these are concerns that how would it be despite that interest rate is going up, but land price is going up, inflation is going up, and will property price drop as a result of that. I think everyone's thinking about this. So
Yes, actually, that's my next question.
Yeah.
Somebody was asking,
Yes.
do you think property prices will drop, especially with the recent new cooling measure?
okay, I believe that it will stabilize. Okay, may or may not be a minor correction in maybe the resale market, because what we are seeing right now is that, especially in the core central region, the resale market, one high is higher than the next transaction is always higher than the previous high. Every sale is a record price in the last 1 year. Okay, so much so that now the banks are being conservative in terms of matching up with the valuations, with the transacted price, with their valuations. So a 2 million properties could be transacting at 2.2 million with 200,000, 10% above bank valuations. That means that the banks are slowing down in terms of how they are willing to match up in terms of valuation price. So will property price drop is a very big $1 million question that I think you need to measure the pros and cons of it yourself. With the interest rate hike, do not speculate. Are you able to afford the installment when at a 3% interest rate? That's an important question, so that we make sure that when you buy a property, you don't have to panic sell a property. That's very, very important. Okay, and at the same time, with all these things that are going on around the world, and where Singapore is emerging as a leader as a financial center, where do you think our property price will be with all the funds flowing in from Hong Kong? Now government is even coming up with cooling measures after cooling measures, such as, especially if you see, it's very obvious that it's targeting at the uber high net worth, at companies, setting up 30% ABSD, additional
35%.
30% for foreigners.
Oh, yeah, yes.
30% for foreigners, the additional buyer stamp duty, in short ABSD, and 35% ABSD for companies, which means that there are actually family offices, funds that are coming in and snapping up buildings and property in Singapore. And that is the reason why Singapore is introducing this measure. Then with that, then people start to be creative, using trust to buy, without
Yes.
without an identified beneficiary, with a very grey way. This trust thing actually is not something new. We have been helping our clients with that, our investors with that, for the last 5-10 years. But recently, because of ABSD increase, people are finding loopholes to go around, avoiding ABSD in this case. So government step in and say, okay, this is out, and this is how they will curb it. So will property price drop despite cooling measures? I believe that the property price, especially in the resale market, the gaps between the seller expectations and the buyer expectation is kind of widening. And I believe that over time, if interest rate increase, seller may have to lower their expectation a little bit. I don't think there will be a major correction or even to call it a drop. I believe that price will probably taper and go into a plateau or inch slightly increasing bit by bit. Okay, but I believe that the banks will eventually match up in terms of valuation when the plateau is being hit, so that in this case, it made it affordable for people to buy a property in this case.
Yeah,
my point of view.
that's the rationale behind the government introducing all these cooling measures anyway,
Yes,
to
yes.
actually cool down the super hot property market
Yeah.
that Singapore has been facing since circuit breaker.
Yeah, to prevent
Okay.
people from using trust to snap up properties and speculate
true.
on Singapore
Yeah.
properties market.
Okay, so the next question, also another $1 million question. So Paul, new launch or resale?
It depends on your needs, in my opinion. New launch or resale, new launch has its beautiful catch about people always talk about capital gain, talking about how developers will stage up the price accordingly. Yes, that is a very generic look at how the new launch market can be, but it is also important to take it with precaution to understand whether if developers are overpricing it because of the hype and interest. Okay, but looking at recent cooling measures, I think the developers are also pretty cautious not to overprice themselves and slow down in their own sales. But you must also understand that for new launches, the developer in the last year, they have bid for land price at record price. So with the record land bid price as well as the increasing manpower costs and material costs, I don't think they can reduce much in terms of property pricing. They will definitely not dare to profit in too much because of because of all the cooling measures that's in place. But they cannot sell at a loss for sure. Yeah, so that's something that I will know. And for the resale market, if you are looking for something that is for your own stay, because for resale market is a roof over the head. You have different agenda, I believe, for different people. Most of the time when we meet, let's say for example, you need a roof over your head, you don't have an alternative place to stay. With government opening up right now and encouraging us to go back to work, I believe that the past trend of hungry for space may ease off a little bit. Earlier on, people were upgrading from 1 bedroom to 2 bedroom, 2 bedroom to 3 bedroom, 3 bedrooms to 4, and 4 to the landed. People are jumping and stretching in every means to go for bigger units. That's what we saw in the last 2 years. And currently, if you have any 4 bedrooms out there, people will be snatching it up. Whereas on the controversial, all the 1 bedrooms, which used to be hot favorite, pre-COVID time, suddenly there's a lot of 1 bedroom supply right now that we see in the market. And they are kind of like, the demands of the 1 bedrooms are generally slow. So I foresee that moving forward, when things start to ease off, people start traveling, people start to want to spend their money back on traveling and lifestyle, and the need for space is not as much as what it was in the last 2 years, it may kind of like balance back. So the 1 and the 2 bedrooms will kind of like balance back as well. That's what I think it will be.
Okay. The next question they have is it a good time to upgrade now?
It depends on what you are looking at when it comes to upgrading. If you're talking about HDB to condo, I would say the HDB price at all-time high right now. If you look at last 10 years graph of HDB, it has been like this, and suddenly there's a big spike up. So if you have that means and financially, and also of course being able to stomach the 3%, I'm saying 3% because I just want to be prudent and making sure that people don't overstretch themselves if you're coming to talking about financing your mortgage loan.
You're talking about the 3% interest rate.
Talking about the 3% interest rate. Okay, so if that is not an issue, and at the same time you are currently in a HDB and you're thinking of upgrading a condo, I'm assuming that's the questions, then I would say that it is still a good time to look at it. Market price is what it is. HDB price is at record price. I believe that HDB prices, I think I shared in some of our sharing earlier on in some other videos. You can check out our YouTube videos if you missed that. So we talk about HDB prices. Why is it at all-time high? Firstly, there's two key reasons. One of the key reasons was when we see a spike in HDB prices was first when circuit breaker starts. When we start to see there was a sudden surge in demand for HDB when a lot of our Malaysians, PR, who have been traveling in and out of Singapore suddenly realized that the border is closed, where their landlord refused to let them into their place simply because of the fear of COVID. So back then, people were all thinking that probably it's time to settle down and buy something in Singapore. So that was a sudden surge in HDB HDB demands. That creates a momentum in the market. So when people sell, then of course these people needs to buy something. So that's where the momentum started. And the second push for HDB prices was when there's a delay in the BTO constructions.
Yeah, the delay.
So that really, couples who are married and waiting for a place, and they have been waiting for the last 3 years already, and was told that it's going to take another unknown 1 year, 2 years. So a lot of them just gave up on their BTO and decided to go for a resale instead. So this kind of like push the HDB price up. Is it sustainable? Would it hold on there? I would say look at your HDB lease because sometimes we see that there are some older HDB, even those that we didn't expect it to go up, those really old ones are at record price right now as well. So if you are looking at jumping on from a HDB to condo, I would still say jump.
What are some properties you would recommend us to buy right now?
For investment?
The question says what some properties you recommend us to buy. So
Okay.
probably for investment, for example.
That will depends very much on the investment sum that you're looking at. Okay, if you have spare names, don't waste it. And of course, within your means, invest in properties. I think so far in our history trend in Singapore, when you invest in properties, Singapore properties does hedge against inflation. And if we expect inflation to continue on, I would say invest wisely according to your financial ability. If you have, of course, deep pockets and are more have a bigger appetite for risk, I would think that probably shop houses. Okay, with all these cooling measures and ABSD being introduced, I expect those funds to start looking at commercial properties, especially like shop houses, because those doesn't have ABSD, and those are open to funds to buy out. Yeah.
So what about laymen, like the average Singaporean? What would you recommend them to buy?
Okay, so if you don't have any properties in your own name and you have some funds and you want to park in real estate in Singapore to hedge against inflation, look at properties that are in the growth potential area. Just go and read up news, watch some of our videos earlier on in our YouTube channels. You will understand some of the growth potential area that the government is developing with the growth of Singapore and expecting it to continue to grow in the next 10 years. Those areas with growth potential will likely continue to grow faster than those without.
One last question. Buy or sell my house first?
So, well, this question is a bit different from the earliest questions. Okay, so buy or sell your place first. The best way is to do it concurrently. Of course, if you have the money to pay ABSD first, if provided it is a matrimonial home, so I'm assuming this is a matrimonial home, meaning a husband and wife own this property and you are upgrading to a second property, next property. So you will probably sell this place and buy another place, matrimonial to matrimonial. And if you have spare fund, of course, the easier way is to pay ABSD, buy this property, pay ABSD, and sell your current place within the next 6 months and do a ABSD remission, a refund for that. That's the stress-free way, but provided if you have enough funds to put with the government during this period of time. Okay, if not, is to do it concurrently. What do I mean by that? Okay, start marketing your place, okay, and start shopping for property at the same time. There are cases whereby our investor actually sell their place before they actually spotted one, okay, because a price too good to reject came by, okay, but of course we will have to negotiate for the extension of stay or something like that to make sure that we can transit accordingly from one place to another. Or there could be cases whereby you have alternative place to stay, like you don't mind moving back to your parents' place for a couple of months, while you do your renovation at your new place. Then that's of course another very easy and stress-free way of going about doing that. On the other hand, we have also came across situations whereby there's just a deal that is too good to be true. Like recently, we helped someone or one of our investors bought a property that is 100,000 below market valuation. Yes, 100,000 below market valuation. In today's market, it's like either it's at valuation or above valuation, but 100,000 below valuation, that's kind of like, okay, is that correct? So I think when you see a property like that, it's a no-brainer. Go for it. But always remember to negotiate for some terms of like extended exercise period. But of course, don't expect to pay a 1% option money when you want to do this type of extension. So get someone experienced to help you to negotiate for such extension so that you have enough time to sell your place. But still, you see, when I say that, you must be confident to know whether if your place is moving or not. That's why I say do both concurrently to understand what is the interest on your place, what's the expected price that you roughly can get, because all places will sell. It's just a matter of price.
That's true.
When you lower your price, you will get someone. But if you see a deal that's too good to be true, lower here a little bit and jump. You see, but if you don't, then just keep it there until someone match this price and jump on the next property when time comes.
All right, thank you very much, Paul. All right, guys, thank you very much for staying with us today. This is, like I mentioned, the first of our brand new series talk show called ATE, Ask the Experts. If you find value in things that we're sharing, do like and share this video, and do follow us on our social media platforms. We have our YouTube, Facebook, and Instagram. Okay, do stay tuned to our channel for more tips and strategies on property investment. Thank you, and we hope to see you guys next time. Bye-bye.
Bye.
Okay, then what can we do to actually reduce the risk of losing that property?
Okay, typically speaking, what we need to remember is that if we leave behind a home that's encumbered with a loan, that means it has an outstanding mortgage loan to be paid.